Thursday, October 10th, market analysis. Stan Ehrlich, good morning. 10:04 California time, a little bit after the middle of the traditional trading day, 6:30 to 1 o'clock California time. You know that I've been looking for a top in the in the stock market indexes for weeks. And there are plenty of signs that that was going to happen. But yesterday we did, in some cases, not all, but the more important ones, the E-mini, for example, make new highs totally. And it closed above previous highs, which usually is a bullish breakout, and you would expect some follow through for several days, week or two or three, a significant move. But I have the problem that we have divergences, new high in price, not in the indicators. And today we have a doji, meaning a little uncertainty. If we close that way, meaning a little lower and no higher high, no lower low than yesterday. But if we start wiggling, trading, and closing below yesterday's lows, that's going to be something that would not normally happen if this was a bullish breakout. So far, I can't help it. Even today's lows are right around the previous few highs and lows, support. And although we're low and last for the moment on the dip, here's the 1 minute chart. And we are not low and last, but for an hour or so. Need to start making new lows for the last several hours. And then for the whole session would be great. But I can't tell you that that's going to happen. So far, upside breakout, little bit of a dip today, back to a little bit of support, nothing super important yet. But if we can get up to a new high on a closing basis, especially above the previous days, that would perpetuate the bullish expectations. I don't know how high is up at the moment. We'll find out if it continues to act bullish, and I am very skeptical about this. I don't have anything to grab onto to tell you that I am going to be right away. Doji inside trading day on the SPY, as you would expect, with the E-mini doing basically the same thing. No change in commentary. Lowest today, back to a few highs. A little support. Okay. Spider, 1 minute. Interesting pattern, but I don't think so. Next. QQQ. Just barely made it into new high ground, and that's only for a high that was made about 3 weeks ago, and that's not new historic highs for the QQQ, which is way back on July 11th. So we have 1, 2, 3 months ago, almost to the day, the previous top. That could very well be a stopping point, and we probably will be overbought by the time it gets there if it just goes straight up to it in the next, I don't know, this week. Well, today's Thursday. Now I'll give it another 3, 4, 5 days. So there's a reason to believe up there at 503-ish. And if we're overbought at the same time, we could stop rallying. Right now, can't help it. I just got to go with the flow, so to speak. We are down a little bit. We did have a higher high. And if we were to collapse today and get below yesterday's low, we will have a brand new ER red sell signal and see if it works. It'd be great because it would look like a short-term little double top over about, 2.5 weeks or so. All right, enough of that. QQQ, higher high, dipping back a little bit on the 1 minute chart. Can't pinpoint anything solidly bearish in my opinion. The NASDAQ futures have come extremely close, not a minor new high. And we did make for the QQQ a minor new high, but its baby did not, but it came super close. So both look like possible double tops, but we're not seeing the weakness. I got to start having some significant down moves. Otherwise, we could stick around and start to go up some more. Please notice we've been above yesterday's high. We are only a little bit lower on the day. We're smack dab on a previous bear trend line that we've now broken through twice. Yesterday, closing a little bit above it. Today, we're right on it. Today's low is well below that line, but it's where it closes that really is the most important thing. But frequently, highs and lows are lining up just right also. Now, that's it. What can I say? I'm waffling back and forth. Can't come to any definitive conclusion for the moment. Breaking down a little bit on the Nasdaq, not that important as far as I can tell at the moment. But again, we've got to get all the way back down below this low to get excited. That's the low at 6:54 this morning, California time, and in particular yesterday's low, because although we're not overbought, it would have a bearish engulfing. Again, yesterday's low is really important. Next, the YM has made new historical highs, the Dow, and in the news frequently, without any particular rally after the news. Now, if you come out with significant bullish news, whatever kind it is, and the market has already been going up, what you usually have is the anticipation of the news has already been built into the price action, and you've got a flat or a top usually. Kind of, I can say that about this market. Now, yesterday when it made new highs for a week or two, but not for the trend up almost, I said if it doesn't close above the previous rally high, the highest high, you don't have your good upside breakout. So we're down a little. Not enough. That didn't even get above yesterday's high. Just not grabbing onto something great here. Maybe it's about to make new lows for the session, and that didn't look particularly important. We didn't get above yesterday's high, so it's a doji so far, and might remain that way. Russell, new low for the move down, but this is not the same kind of apple. It's an orange, and it's been trending lower from a major resistance area and sort of a broad, sloppy double top since September 19th, 3 weeks. And we have a new low today. The lows have been consistently lower. The lowers have been consistently lower, and the highs have been consistently lower also for the last 3 weeks. And that kind of defines a downward sliding channel, but that could be eventually a bullish pattern. Well, we'll see. I think it's going to work lower. Not oversold, not even close. And the short term for the Russell. Now, bonds and notes have done very, very well in this group, interest rates, for a month or two now. We had two toppy formations. There's the high that was made on August 5th and the high that was made on September 17th. Now, I called it kind of a sort of, not the best I've ever seen, that's for sure, double top. And the high, second high of the double top right here around September 13th, a couple days before and after, in itself, a tiny little double top. Anyway, that's the head. Here's the shoulder, August 21st, and the last shoulder I started yakking about around October 1st. I drew a line in. Apparently, it was probably September 25th. It starts at September 24th because I probably drew it after my YouTube on that day. But I did have in the circle, and that was before we had this little rally to make the last shoulder, and then a downside breakout, which was on October 3rd. And we've had 1, 2, 3, 4, 5 down days since the bearish breakout of the head and shoulder top. The minimum downside objective for the head and shoulder top has almost been fulfilled. It is this little horizontal light yellow dashed arrow. So 90+% done. And ladies and gentlemen, it is in my green circle that I was hoping I would get down into during the time frame of October, which it is, and below the high of the circle, which was 120.20, and it is a low today of around 19.28 or so. Super close. And right now it's at 19.30, 119.30. So it's done. It worked. Wow. Now let's see how much better it might get. I want to get to my minimum downside objective for the head and shoulder top, but the downside objective for the double top formation is significantly lower, 116.14. And the idealistic date for a turnaround to the upside, no matter what price it gets down to, is October 17th. And I'm hoping it's in this little support area, which is around 118.08. So let's just say 118 on October 18th is my dead on bullseye, which I highly doubt I'm going to get. We'll see. 10-year notes are even better. We did have a very nice looking double top in the 10-year notes. That's the first rally high, August 5. The second rally high is a little 2 days combined, almost the same prices. Then by themselves, a tiny double top, but it's really a broader one of a mild month and a half. The downside objective on that is measured by the blue dashed line and over to here, which is now the apex of my circle, the center of it. And I drew a box around the circle to a little bit better vertically and horizontally outline my downside price and dates. Now, the dates have come and gone. This is October already. So all I need now is a little bit more of a break in order to get below 111.14. And then we will be in my circle. And also bonds will sink a little bit more, of course. But wow. Not only that, but the second high on the double top formation was a bearish ER sell signal, exactly why I built this automated trading system in the first place. Not all the signals work. We always have a protective stop immediately when the automated trade is made. And the stops come down. There's my yellow trailing stop. We nickname it Smart Trailing Stop, or STS. We're way down here now for our stop at 112.18. Current tick 11.30-ish. Exactly. And we're short an ER1 overnight and an ER3 from a little bit higher price the next day on a rally, ER3 overnight. We have two longer term trades, let alone the scalps associated with ER1 scalp, an ER3 scalp. I don't remember how they did. They could have made a little money, lost a little, I'm not sure. But the overnight, huge. Next. Top of the market occurred just 2 days ago in crude oil, in my opinion. We've had a rally back up to ER3 levels, so we're short on ER3 also for a scalp and longer term if you choose to use either one or both. Both of them have a little bit of a loss at the moment. Signal looks like a pretty good one, and I was expecting, always do expect, a rally back into approximately the middle of the signal day, be bullish or bearish. So about 40% of the time that really does happen, but maybe 50% of the time it doesn't, but I'm still in an ER1 trade. We had a top of the market, ER1 and 3, ER signal period, perfectly on top. Remember, this is all automated. Watching during this day, the price action develop, you can tell it was going to happen. You were overbought, coming back into a support area. Honest to God, this has been just great. Since the bearish engulf, we've had 1 down day, 2 down days, 3 down days, and today is up a little bit. After a new low for the trend, and we are out. I see that we got stopped out very little while ago of our automated trade. Bought it back at approximately 2.659 or so, and we got in approximately 2.884. Lasted 1, 2, 3, about 4 or 5 days. Next chart. Now, what coming next? Just because we got out of a short doesn't mean my opinion changes. No, I think we're still going to go down to 2.302. And no, expecting that, why wouldn't I change my stop sometime in the past? You can't do it, after the fact. So it was coming down a little bit slower. You could do that if you wanted. Just a matter of adjusting what we call its kicker. It's not a moving average, although the result of it is somewhat similar, but not a moving average. I don't like moving averages. By design, they're always late. Next, short signal 2 days ago, rally in heating oil, right smack up to the ER3 new short. So we're in a new short scalp here and a new overnight 3 here. almost exactly to the tick. We're out of the other two trades. Looks like they both should have made a little bit of money. I'm not positive about that. And heating oil, a brand new short from where we are pretty much right this moment, give or take a tick. And obviously, I'm expecting it to go down and test new lows to the move. What have we got on gold? We got a bearish engulfing, unfortunately not the high day, but it was on October 4th. Next day looks like a slightly lower close, then a lower close, then a lower close, and today is the first day up. We do have a bullish engulfing. We've got higher highs than yesterday, lower lows than yesterday, and a new low for the trend. And at the moment, higher on the day. There's an outside up day or bullish engulfing. It implies there's going to be a little rally. So one would consider tightening their stops pretty quickly, or maybe leave it the way it is, especially if it has some sort of a profit locked in. I'm looking for lower levels. I don't think this bullish engulfing with an RSI around 40, 50 is going to do it much good. Maybe a day or two, a bounce, and then new lows after that, down to approximately 25.63. Next, not too much to say on silver, topped out in a resistance area, no particular signals. A new high for the move, didn't close above previous highs, and look what that led to. Boom, 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 and a little bounce. That's the warning signal right there. I keep telling you that. It's got to close above those previous rally highs, and that didn't do it. It came way down and closed a little lower on the day, it looks like. Next chart. And I'm looking for lower levels. Platinum, same thing, looking for lower levels. No signals. It just simply got up to a resistance area and at one point overbought. Divergence, new high in price, but not new high in the indicator. And we now have sort of a downside breakout with a minor bounce, looking for a test of 912, but the support does start at 937. So 937 minimum, probably lower, 911 and even lower. Next, high-grade copper, got a sell signal on the top day, exactly, September 30th. We are still short from an ER3 rally, got up high enough to go short, almost at the high of the day, 2 days after the signal. No problems of any significance in dropping down. The stop is now down here. We're having our first decent up day. Well, second maybe, since we're short. That's great. We're loving it. We're locking in a very nice profit. It's taken about a week and a half so far. We made a profit on that because I can plainly see the green dots coming down inside the date of the signal day. And it looks like we have maybe a losing trade, small scalping loss on this bearish engulfing. But the signal itself is okay. And there's another opportunity if you wanted to get short because of this red second bearish engulfing ERSL signal. Now, the body's very small, kind of like a spinning top type of thing. And therefore, it's not as easy to see as this one with a big red body, which I think is better, but no particular preference. Okay, next. No signal on the high of the rally, simply got overbought. Not much to go on this turn, but it turned. I'm looking for a test of at least 997 and probably 958 and lower. What do we got? Soybeans. Now we're into the grains. So I'm going to go oil, meal, corn, wheat, cattle, and hogs. Next. Sort of a double top, not really, but two great bear signals. The one that occurred 2 days ago, Tuesday of this week, allowed us to have a rally back up into approximately the middle of the range of the bearish engulfing on Tuesday of this week. We're now short from a couple of ticks lower than the current tick for an ER3. I'm liking what I'm seeing. I expect the market to go no significant amount higher than it has today and to start making new lows probably easily next week. Next, bean meal. New lows to the move down, got overbought. Can't peg a turning point here. Didn't see it really. Got a little higher than I would have expected in the first place, but it did come up very close to the old highs resistance area and then turned down. Okay, so a new low for the move down now and a new low since September 3rd, over a month, about 5 weeks. So kind of perpetuates the bearish expectations. I think we're still coming down to 299 and significantly lower. Now, this is basically still a very long-term bear trend, in my opinion. Corn. Oh, another one. Wow, I didn't realize this until now. We got a second bearish engulfing sell signal today in corn. We already had one on Tuesday. And oh my, wow, you don't see this very often at all. Very rare. I'll repeat, very rare. What's very rare? Today's high got high enough. Yesterday came extremely close to the new short trigger because of the sell signal on October 8th. We looked like we almost sold the exact high of the day. The trigger seems to be at 223.50, and today's high was 224. I'm sorry, missed by 2 ticks. Plus, this is the really, really rare part. I expected it to come up to the trigger, not necessarily so accurately, but the fact that it also has another bearish engulfing sell signal today, with the high of the day being a fill from the ER3 previous signal on Tuesday, that's the unusual part that, just ticked down a hair. That's the unusual part, that you get two bearish ones with the high of the day on the second one being a fulfillment of the signal from the first signal. Wow. I sure hope this works good. No guarantee of that, but I got to spend a few extra seconds on this particular corn signal today, October 10th. Wheat. Well, nothing fancy. Up to resistance, up to resistance, got overbought, turned down, and now we got a 1, 2, 3 little day rally. I kind of think it's going to stall out again and not make new highs. It might test resistance again. But I expect the trend to basically continue to be a little wobbly to bearish. And soon, it might take a week or 2, 3, we're going to get down to 563 and lower. Okay, cattle. Yesterday we had a bearish engulfing ER sell signal, and it did not work. Period. End of story. Today we rallied above yesterday's high, which is a fail-safe stop. I know from my experience that because today's low, and that happened first, it was low enough to start pulling the STS, smart trailing stop, down on any position, period, which it probably did. You can't see it very well on these daily data charts. You got to turn them into 1 minute or 5 minute or something like that. But I can't do that on all these signals. The show would be much too long. Now, then it came up and stopped me out. But the stop at least came down some, but it was a losing trade and a losing scalp yesterday. So the overnight from yesterday lost also, unfortunately. Boo-hoo, I'm going to cry in my beer. So there's an example of a bad signal, immediately proven so. E-mini. No, where are we? Hogs, sorry. So we're pushing up against resistance. This is the 4th day that the highs, maybe even 5 days, 6, 7, that the highs are fairly close together. That's a loss of momentum. If we start seeing the market make a little bit lows lower than yesterday's lows, I think it will have turned past tense. And I'm expecting exactly that. And I think we're going to come probably all the way down to 67.32. We'll see what happens. Now the E-mini again. Down 11, which is only down about a point on the spider, but negative territory. We really haven't dropped off. Yeah, it's not there yet. I just can't get excited about the downside. But again, if we start making lows for the day, new lows for the session, then it's going to look a lot more interesting. But you guys have a great day and profitable trading to you.